Don't forget to subscribe to this awesome channel because you are going to learn a lot from it. So after yesterday's speech of Mr. Powell, the Federal Reserve Chairman, the prices moved dramatically. For instance, the S&P went up and the euro dollar also went bullish, like more than 100 pips upwards, as you can see here on this daily chart. So what I'm gonna do and what is my perspective about the pair for the next week. As I told you several weeks ago, the pair has formed five Elliott waves, clear Elliott waves here. Then it formed a correction after the fifth wave, and the correction made an expanding triangle or expanding wedge. I don't recommend to trade the expanding wedges yet. There are additional points here to be noticed. All right. So usually the expanding wedge following the five impulses is A B C D E. So this is A B C A B C D, and we're waiting for the E. Okay, where should we expect the E? I'm expecting it to be around this point. I'm not advising you to trade it this way. I'm just sharing with you my thoughts and trades. Okay, so according to my personal thought, I believe this is going to be a bearish chance. Okay, from one side it's bearish. I'm going to tell you why it's bullish now. But it's from one side this might be bearish because we are waiting for the E movement in the correction of the diagonal here, for the expanding diagonal here. And why it's to this level? Because from one point this is a Fibonacci retracement level, 61 level, 61.8. From the other hand, there is a 100% projection with this trend line here. We can see the orange trend line. If I drew a projection from this point, the 100% is going to be at the same point here at 0.6 61 at 61.8%. So from one hand, this is going to be number E, possibly, but there is a 100% projection between this line and that line. All right. So this is from one side. If the price disrupted the pattern here and went up, it's going to be bullish to me. The 15 years trend line here, the black line I'm pointing at, it goes back 15 years backwards, but it's not shown here on this graph. So what will be my decision? I'll tell you my decision now. On the if I When I convert the bar chart into or the candlesticks chart into line chart, it shows me that this is an inverted head and shoulders. Okay, you can see here a clear head and shoulders, a clear inverted head and shoulders, which is reversals. This is another sign or indication that the price will go lower on the daily chart. Let's go to the weekly chart, line chart. It's also forming a double bottom, which insinuates that the price may go lower. Okay, so the head inverted head and shoulders double bottom, the expanding diagonal here after the three impulses of the five waves of the Elliott waves, the projection, all of these are signs, indications towards bearishness. I'm talking technically, fundamentally also. Fundamentally, The interest on the dollar is 4.5. If it got lower to 4.25 or even to 4 or 3.5, still higher than the euro, which is 2.5. There's a huge gap between the two interests. So fundamentally, the price shouldn't be that high. Let's move on to the euro index, and we can see here from this index how submissive is the euro to the dollar is, because we can see here that the weekly chart. This is the weekly euro index, not euro dollar, just the euro index. You can see here clearly one, two, three, four, five waves, then followed with expanding diagonal. Same at the euro dollar chart, the same trend line here. Let's see. Okay, so this shows you how much the euro is submissive to the dollar. The dollar has the most influential on the euro pairs. For the dollar index, we can see here that the price is barely touching the historical trend line. I told you this is 2008, 2009, and the prices start to move on a bullish trend line here, as we can see. So that we are in on the ropes here. The price either to break the trend line and go lower parabolically, or to reverse and start to go upwards dramatically. So that's why my decision for the next week is to stay out of the market unless the price of the euro dollar moves bearish parabolically. So if I saw a retracement at least to the previous support here, this area, if I saw the prices get lower to this area, this is going to be enough confirmation for me to the continuation of the bullishness, and I'm going to short the pair. If I saw a retracement towards this level and a slight breaking under it. So at any day, if I saw a daily closure below this level, I'm going to short. It will be wiser if you waited until the price closes. If I waited until the price closes under the red moving average here, it will be way wiser. So my decision is going to be I'm out of the market. I'm going to wait and see what's going to happen, and like it or not, the market is going to be very choppy between today and the next 25 days until the Fed Reserve issues its announce its next rate. Okay, so as a recap for the euro dollar, there is an expanding diagonal as a correction for the five idiot wave moves. A, B, C, D has formed. We're waiting for the move D. All right, we have 100% projection between this line and that line. So we are expecting for this long-term trend 61.8 retracement correlated with the projection, possibly with the diagonal. Okay, we can see E here. On the other hand, we can see an inverted head and shoulders for reverse. On the weekly chart, there is a double bottom. What else? Euro index is very submissive to the dollar movements. Dollar movement is at the ropes. It's in a very pivotal point. It may go upwards or break parabolically downwards. This is the weekly chart of the euro index. Same a historical trend line here. Okay, this is a very important point, and I don't think that anybody has ever talked about. This is the euro versus USDT. Okay, not which works even 7 days a week. It works even during the weekend. So this was the market closure. This is our chart. This is the market closure. Okay, the market closed at this hour. After that, the price went parabolically upwards. Okay, it went up like 50 pips, even more, till the 1800s, because there was some kind of triangle here and the price exploded upwards. If it continued like that next week, it's going. Well, the next week is going to open with a huge gap upwards. So we are going to wait and see. That's why I'm telling you I'm not going to trade. Please, during the weekend, have a look at the Euro USDT, okay? Because it tells you how well the market moves before the opening of the next week. We have also the S&P 500, okay? We can see here, as I told you last week, it's forming five idiot waves: wave one, two, three, four, and now it's possibly to form wave five in the same context of an expanding diagonal. Also, you know that the idiot wave usually loves expanding diagonals. So there is a possibility for this index to go towards 7,000. Okay, this tells me that it might go to the 7,000 when the fifth wave meets with the yellow line here. There is a possibility, and the possibility is open for reversal also. The fifth wave may stop here and go reverse. Nothing is for sure. All right, but we still have 25 days between today and the next Fed meeting. In the same context, I'm having a sneak peek on the European indices. Some people tells me in the comments that they don't like European indices. Okay, focus more on the American stocks, and I don't understand what you mean by I don't like or love European stuff. We are looking for value wherever it is. I don't care what is the name or what is the label set here. I care about this chart. I don't even look toward the prices here. Usually, I ignore the numbers here. I'm just looking to the price action. And the price action here on the CAC40, the Frenchman index. This is the hourly chart, and it's forming some kind of expanding diagonal also for like 2 weeks now. I can tell you this is a lower low, a lower high. I believe the price is starting to reverse from this point. Once it breaks the trend line here, it's going to go dramatically downwards. By the way, you have to understand that all the markets are correlated, but be careful. This is a hourly, this is a daily, and for the S&P, the price may reverse at any time. It hasn't to. There's no anything, any law in the world enforces it to go upwards to meet the yellow line. No, just I'm telling you between here, this is the minimum, that is the maximum. Anywhere between this and that, the price will reverse. I'm not advising you. I'm just thinking loudly. This is my loud thinking. Okay, in the same context, you will find the UK Ftse100. The price has formed hourly chart, rising which the price also may break. Once it breaks the lower band here, is going to fall bearish. Ethereum, I told you before about the Ethereum. This is a weekly chart, by the way, and during the weekly chart, it has formed a symmetric triangle, and the price has just broken above the symmetric triangle. Okay, the price may go a little bit higher, then retest the triangle again before it skyrockets. I believe this is going to be very bullish, but it's a long-term investment. So the price may dance upwards and downwards between today and upcoming months. So if you're not a long-term investor, so you have to be careful with this. If you're a long-term investor like me, um, you have to have a look and consult your financial advisor about the Ethereum, because from my own point of view, this is going to be very bullish. And thank you very much for watching me. Don't forget to subscribe, because as you have seen, it's very beautiful and helpful channel which will help you to learn a lot. Subscribe.